Medtronic, stock ticker MDT, is currently trading at $78.59 per share. It's been a rough year for the company. We can see over the past year, they're down about 30.33%, and year to date, they're down about 26%. Now, I was reading some articles on Seeking Alpha about the company, and I ran across one that I do tend to agree on, and essentially they're making the argument that there's a lot of negative sentiment around this company due to some short-term concerns, but they think that's providing a long-term opportunity. And something that I really love about this is when I look at the historical dividend yield for this company, we can see it's been hovering around 2% for the past 5 years, but this huge downturn in its stock price is pushing its starting dividend yield of close to 3.5%. And when we look at the dividend scorecard on Seeking Alpha, there's a lot of positives: dividend safety, dividend growth, dividend yield, and dividend consistency, all given really good scores from Seeking Alpha. So in this video, we're going to be jumping into my stock valuation spreadsheet to see if we can find the intrinsic value of Medtronic. And we're going to be looking at 4 different valuations. We'll look at Graham's valuation, a discounted cash flow, a multiples valuation, and a dividend discount model. And all 4 of these valuations, like always, will roll into our output tab. So let's go ahead and jump over to our stock screener. If you'd like to be able to download the spreadsheet, then you can head over to my Patreon page at the link in the description. But let's go ahead and come up here, and we will plug in the stock ticker for Medtronic and hit enter. And you can see all of this data is going to automatically load in. Now we're currently looking at a 365-day change, so we can see a huge decline in the share price. Come over here and look at the dividend data. We can see they're paying out $2.72 per share, which gives them a dividend yield of very close to 3.5%. Now the payout ratio is currently sitting at about 81%, but I'm projecting that this will lower quite a bit in the coming months. Now again, 20, 50, and 200-day moving averages all down quite a bit. If we come down here, we can see analysts currently have a target price of about $94 per share. The beta is sitting at 0.84, so technically you shouldn't see a whole lot of volatility in this company. They also have decent institutional ownership at almost 85%. Now the first valuation that we typically look at is Graham's valuation, but after researching this company a little bit more in depth, I don't think this valuation is going to provide a fair value for this company, so we're actually going to skip it and go ahead and move on and look at the discounted cash flow analysis. And in order to perform a discounted cash flow analysis, we need to project a growth rate for the future free cash flows for the company. So what I've done is I plugged in the historical free cash flow for this company dating all the way back to 2013, and this allows us to see our year-over-year growth rates for this company. Now the average growth rate over that time period was about 7.35%. So moving forward, I'm projecting a growth rate in line with analyst projections of about 5% to the future free cash flows, as we can see right here, and to the terminal value, which is the sum of the future free cash flows past the year 2030. I then found the present value of those future free cash flows and added them together here, added the company's cash and cash equivalents, and subtracted out the total debt to get their equity value. And once I had that, like always, I divide by the shares outstanding, and I came to a discounted cash flow price per share of about $85.24. That's about 8.46 higher than that current trading price. Let's go ahead and move forward and look at our multiples valuation. And I think this is a really important valuation model to look at this scenario because we have some good comparables for this company. But essentially what we're doing is we're seeing how the market is valuing companies that are similar in structure to MDT. So you can see the comparable companies we're looking at right here. We're taking their stock price and dividing by the earnings per share to find their price to earnings multiple. And you can see these companies do trade at a very high price to earnings multiple. I took the average and got 38.65, multiply that by MDT's earnings per share of 3.22, and came to a pretty high intrinsic value of $124.47. So we can see the average price to earnings for these comparable companies sitting at 38.65. When we jump over to the stock screener, we can see the price to earnings for MDT at 24.4, a little bit of an indicator that the market may be undervaluing them. But let's go ahead and look at our last valuation, and that's going to be the dividend discount model, one of my favorites to look at for value dividend stocks because it values a company based on how much they pay in dividends and how much that dividend is increasing over time. So we can see I plugged in the quarterly dividend payouts here, so we can see exactly how much they pay out each year. And this also allows us to see our year-over-year growth rates, just like our free cash flow. So we can see pretty solid 8%, 7.41%, 8.62%, and another year of 8%. So pretty good dividend growth over the past few years. That's an average growth rate of right at 8%. Now moving forward, I'm projecting a growth rate a little bit lower than that at about 4.25% and a discount rate of 8%, which gives them a dividend discount model price per share of about $75.62. That's really quite at the current trading price for the company. Now, I do think it's possible for the growth rate to be pushing closer to around 5%. I think this is a little bit more conservative, and that's partly due to the slowing free cash flow. It's not bad free cash flow growth, but I would like to see a little bit higher than 5% to project a higher dividend growth rate as well. But let's go ahead and jump over to our output tab, and we'll see the 3 valuations that we use: discounted cash flow at 85.24, dividend discount model at 75.62, and then a good valuation with the multiples valuation at 124.47. And when we average those three together, we come to an intrinsic value of $95.11 per share. Now, the current trading price for this company is $78.59, but we are value dividend investors, so we do always want to apply a margin of safety. So let's say we only apply a 10% margin of safety. Based upon that, our acceptable buy price for the company is sitting at $85.60, meaning now may be a good time to consider adding this to your portfolio. Let's say we're a little bit more conservative and we apply a 20% margin of safety. The acceptable buy price is sitting at $76.09, meaning it's not quite at that buy range, but it is approaching it very close. Now, I hadn't been watching this company too close previously, but after performing some analysis on them and doing some research, there's a lot of things I like about this company. Obviously, a good starting dividend yield, and I think it also does appear to be a little bit undervalued as compared to their competitors. So that's something to take note of as well. I'm definitely going to be adding them to my watch list, and I may consider adding them to my portfolio in the future. But there you go. There's an analysis on MDT. Go ahead and let me know what you think of this company in the comments down below. If you'd like to be able to download this spreadsheet, then you can head over to my Patreon page at the link in the description. So that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.